Hello everyone. Today we are going to look at how to invest in the electric vehicle revolution. It is not an easy industry to invest, but I'll share with you what, in my point of view, is the best way to invest in this trend. We are going to run through the electric vehicle market overview, which from now on I will call EV for short. And what are the predictions and investment opportunities? We will then look at how to invest in the EV batteries, and then we will dive into my favorite way to invest in EV, which is metals, particularly cobalt and miners. Finally, we will wrap up and draw the conclusions. Before we start, I must say that I'm not a financial advisor and this video is not financial advice. Please do your own due diligence before investing in anything. EVs is one of the fastest growing industries out there. In 2020, only 2.5% of the cars were electric, but in 2030, it's expected that more than 30% of the cars will be electric, which is a staggering more than 10x growth in just 10 years. With such a strong momentum behind it, if we place our investment properly in the space, we are gonna benefit massively in the coming years from this market expansion. Investing in this revolution though is difficult and risky. So we are now going to see what investment opportunities are there and which ones can give us low risk to high reward. There are essentially three ways in which we can invest in the industry. We can bet on the car manufacturers, the infrastructure around the EVs, such as charging stations, and then batteries. We will now walk through each of them and I will tell you what I like and don't like about investing in each of these three categories. If we look at the car manufacturers, the big leader today is Tesla, with 500,000 EVs sold in 2020. Quite a distant second is Volkswagen with 220,000, and then all the others are following. So there is no doubt that Tesla is the leader today. But when you invest in something, you have to make a bet on the future. And is Tesla going to be a leader in 5-10 years from now? I certainly don't know. I think they will be there and they will be a big player, but whether they will be such a dominant player, I just don't know. And I think that this makes them quite risky actually, because now the markets are baking into Tesla's price to be a winner. But if some other car manufacturers were to start to eat up Tesla's market share, then the markets will start pricing Tesla stock in a very different way. And that is a huge risk on the investment. And what you can see in this chart is that the Tesla stock price went nuts in the last year. 1 year ago, a Tesla share was $50 and now it's over 10x that price. A lot of Tesla future growth is now priced in the stock. I do think that Tesla will be an amazing business and will be a dominant player, but I just think that now, from the investment perspective, the stock has become too risky. NIO is an EV Chinese manufacturer, and just like Tesla, this stock had a lot of hype in the past year and the stock price also 10x'd. And just like Tesla, a lot of its future growth has been baked in the price now, and that makes it right now a risky investment. Investing in the legacy car manufacturers that are trying to reinvent themselves as EV plays, like Volkswagen, I think it's an even much worse idea, because for every EV car that Volkswagen sells, it will sell one less internal combustion engine car. So in a way, its success will cannibalize its current business. So, in my eyes, investing in car manufacturers is not the smartest way to benefit from the EV revolution. And the big reason for it is that it's extremely difficult to predict who's going to be the winner. And a lot of future growth has already been baked in the price of the stock. Another possibility to invest in EVs is the EV infrastructure. And a big one there is the charging station infrastructure. The market is very fragmented with a lot of players, and I feel that it's even more difficult to pick a winner as compared to the car manufacturers. There is currently a race to build faster and faster charging stations, since it's predicted that a tipping point for EV adoption is when the charging time will decrease to just 15 minutes. And in order to do that, charging stations have to become more and more powerful. And the aim is that a 350 kilowatt station will be able to lead to just a 15 minutes charging time. So the technology is not fully implemented yet, and which company will get there first at scale is really difficult to predict. Furthermore, Tesla announced some time ago that it doesn't seek for its charging infrastructure to be a cash generating business. It just wants to break even. And if this continues, it's going to be very difficult for other companies to be able to have a pricing power and earn money on it. So overall, I think that we are still too early to predict how the charging infrastructure game will play, and therefore is too much uncertainty for me. Another sector that we can invest within the EV space is batteries. And for me, batteries are a much more attractive investing opportunity than the other things we listed before, because every electric car will need batteries. And therefore, it will allow us to profit from the growth of the entire ecosystem instead of betting only on one or another company. And within batteries, there is a couple of investing strategies that you can take. You can invest in batteries manufacturers, or you can invest in the components that the batteries are made of. We will look through both investments opportunities, and I'll share with you what is my take on them. If we look at the battery manufacturer landscape, we can see that as of today there are three major players: LG, Panasonic, and CATL. I think this pie chart will look very different 5 years from now, because everywhere I look, I see news of new battery manufacturer companies starting up. So it's a bit risky to pick a winner now. Moreover, two of the big ones, LG and Panasonic, don't make only batteries. They have a variety of other businesses. So if you were to invest in these companies, they wouldn't be an EV only play, and you would be exposed to other markets that you might not want to. But let's look now at the pure plays, which are CATL and BYD. CATL grew dramatically in the last couple of years. The stock price went up 4 to 5x, and it reached a PE ratio of 129, which is very, very rich. This company will do probably very well in the years to come. However, I can see that a lot of the future growth has already been baked in the price, so I think it's a bit too risky for me. BYD is the same story. Very rich P ratio of 98 and 3x in the stock price in the last 2 years. Too exuberant for my taste. Battery manufacturers are not the only way to invest in batteries. In fact, there are some really interesting materials that go into a battery pack. We have the anode material, which is graphite, we have the electrolyte, which is lithium, and then we have a cathode, which can be very different formulations. I think that investing in these materials is a very attractive, because no matter who will be manufacturer of the batteries and which company will put them in their car, the growth of the EV ecosystem will benefit the price of these materials. So I see them as a way to bet in the entire sector. Let's now dive a little bit deeper into what these formulations of the cathode are. Tesla Model S has a cathode that is made of nickel for 80%, aluminum 5%, and cobalt 15%. If we look at smartphone of Apple, its cathode is 100% cobalt. Another car, Nissan Leaf, has a cathode that is 100% manganese instead, whereas the Tesla Powerwall has a third split between cobalt, nickel, and manganese. So these three materials, nickel, cobalt, and manganese, are key for the manufacturing of cathodes. So my investment thesis is that if EV demand surges, battery metals demand will increase, and that will push up the price of those metals. And the beauty here is that no matter if Tesla or Volkswagen will be the dominant EV manufacturer, and no matter who will produce the EV battery, investing in these metals will make you win anyway. So from my perspective, is the best risk to reward investment. Among the EV metal, I'm most bullish on cobalt. Cobalt has an extremely problematic supply chain where 60% of the world cobalt is mined in only one country and a very unstable one, the Democratic Republic of Congo, which is a Central African country that you see here. This creates a number of problems because if problems arise in this region, the world cobalt supply would be disrupted, and that would mean an extreme spike in cobalt price. The governments in these regions are also very unstable, and the infrastructure that support cobalt mining and transportation is not solid. Then there are other problems like child labor that is involved in mining and many others. All this means that if there is a high instability in the region, it would create a dramatic shortage in the metal, and therefore it would push up the price. In 2010, only 25% of cobalt was used for battery manufacturing, but in 2025 it's expected that more than half of the cobalt to be used for this. So this means a huge increase in demand for the metal, which combined with the geopolitical problems we just discussed, creates in my eyes the perfect buy opportunity. In the last 5 years, the cobalt price remained relatively flat, apart this huge spike in 2018. And this shows us what can happen with the cobalt price if the market gets nervous. In my opinion, it is quite likely that we will see this type of spike or even bigger in the future due to the metal demand for batteries coupled with the geopolitical risks. I have done a back of the napkin calculation which I would like to share with you, and that is pretty astonishing. So, we know that typically EV batteries require 9 kilos of cobalt, and we also know that 140,000 tons of cobalt are mined each year. And these are data from 2019. So, if you do the math, this is only enough for 16 million cars. And if you look at the EV sales projections for the next years, 16 million cars are expected to be made already in 2026. This means that in 2026, EV cars will eat up the full cobalt production, let alone the cobalt that is needed for smartphone batteries, for laptop batteries, etc. So we'll see an even further increase in cobalt demand after 2026 when more EV cars will come. I think this will create a huge shortage of the metal. Sure, there will be some mines that will be starting producing more, there will be some mines that will open up, but I think that the offer will not be able to meet demand. And if that is true, cobalt investors will benefit massively. And this is my investment thesis. My favorite way to invest in a metal is through miners, because as the metal price goes up, miners' profitability also increase, creating value for the business shareholders. Furthermore, the miner profitability is leveraged on the metal price, and I brought up in the next slide an example that illustrates that. It's truly fascinating. Let's assume that the price of the metal is $100, let's say per kilo, and that specific miner company, it just costs $100 also to extract the metal from the ground. So in this case, the company would break even. Let's now assume that the metal price increases 10% to $110. Then of course now the company will start making $10 per kilo. But now pay attention to what happens next. I have brought up two scenarios. One where the metal price increases 10% and another one in which the metal price doubles. So in the case of the 10% extra increase, the company will now make $21 of profit. Look, this is not 10% extra, it doubles. Now let's take the example where the metal price doubled to $220. Now the company is making $110 in profits, which means that it 11x'd the profits as compared to $10. This that I just showed you is mind-blowing. As the price of the commodity increases, the earnings for the miners increase exponentially, and this makes miners very volatile, as a little change in the price of the commodity has a huge consequences on the miner's business. Some people don't like this, but I see this as a huge opportunity, and if you can stomach the volatility, then it can lead to a huge reward. I brought here in this table a few examples of companies and miners that are exposed to cobalt price. When you look at the miner, you have to take into account a few extra things besides the normal due diligence that you have to make with any stock. Some miners are very small, some are huge, and you can see here I brought two examples of $1 billion range in terms of market cap, and others which have only a few tens of millions in their market cap. Also, usually a miner extracts more than just one metal, and as you can see here in this column, many of these miners, these cobalt miners, also have nickel as their major metal, which is fine actually, since nickel also goes into EV batteries. Some other miners are more diversified, which are less risky, and you have to decide for yourself what you prefer. Moreover, the geographies in which they mine can be very different, as you can see here. Miners in Western countries are less risky because the jurisdictions are more reliable. And especially in the case of cobalt, geography is very important because I wouldn't want my miners to mine in Congo since there is such a big problem with child labor. So in conclusion, if you believe that EV are here to stay, the metals to produce their batteries will be in high demand, putting an extremely high pressure on their prices. Investing in EV metals, particularly cobalt, is an extremely attractive strategy that avoids the risk on betting on one specific car or battery manufacturer. I really love this strategy because in my eyes it allows to profit from the entire EV revolution without having to bet on a specific horse. I hope you guys got a lot of value out of this video, and if you did, please click the like button and subscribe for more videos. That's it for today, and thanks for watching.